Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content. It is Friday, April 29th. It is 6:58 a.m. as I'm starting the video. Please run your player at 1.5x. I'm going to bypass futures and earnings and dive right into the charts. I did see that oil was up and gold was up 25, so that's a little departure. I think we're trading down on all the averages, but not markedly so. If we look at the McClellan oscillator, we were down here at 60. Of course, we got the rally yesterday, brought those out of tagging those oversold conditions. In this particular instance, I don't think it's going to result in a zoom up to the top, although that's certainly possible. The market does what it wants to do. But I think in this case, given we've got the Fed next week, I think the risk of a big upside explosion are on the low side. If we look at the NASDAQ, same thing, bounced up here to minus 26. Just I don't even think it got to minus 60 here. If we look at the vol term inversion, we came out of extreme fear on the bounce, not markedly so. I mean, we're down at the low end of the range, so we'll have to see if this rally has any legs at all today. SPY, here was our tag of the March lows. We had a hesitation day on Wednesday, and then we had the big lift yesterday. Now, if we go down to the 60-minute chart, we're right here in the middle between 426 and 431. I think, and actually, I don't have it on here, but we closed a gap. If you can see that here from on this day, we had a gap down. We filled that gap to the penny yesterday. So I think today the numbers you should key off of are 431 and 426. I think if we were to trade back down through 426, that would be a good place to enter a short position. Or if it comes back to 426 and holds, that would be a nice objective level to try a long if it looks like that's going to hold for a potential week-ending rally for a push up to 431. Going to the Qs, now we had that big move yesterday, 3.5%, probably on the back of Facebook's big number, kind of a sigh of relief rally. You know, they had been knocked down 50% off of the highs, and everybody was, you know, biting their fingernails about how bad this could be. I don't think, you know, I'll throw out the caveat that I'm not, you know, a close Facebook follower or fundamental analysis, but what I gather, people were fearful of the worst, and when they didn't get that, that was literally a sigh of relief. So it did a moonshot yesterday. We'll look at the chart in a minute, but you can see, I just want to keep the big picture in mind that the rally brought us up to the 8-day, right? This thing has been in a hard sell-off. We've talked about these moving averages being bearishly stacked, and now the moving averages will act as resistance on the way up. Now today, I think this 330 area is going to be important. Why? If we break above that level, you can see a little void in the chart, and then that would open the door for a move up to that 339, 340 area, where you can see there were a lot of reactions along that line. Plus, you can see the large volume over price bars come out. That is right where the 20 EMA comes in. So I think that would be on a breakout above 330, I think that would be a good technical target where I would expect that any rally, at least for today, would probably be contained. And I mean, that's another $10. We were up $11 yesterday, so that would be another 3%. Kind of hard to envision, but hey, anything can happen if they end up deciding that, the Amazon report really wasn't that bad and they start buying that up and they start buying up Apple. Anything can happen. So I think that 330 area is going to be important. And you can see really on the hourly chart here again, we filled that opening gap. I've since removed it. You can see we had a gap down, and then we came right up to that 330 level on the chart where it backed off in that final hour of trading back to 327.50. Now, this morning, we're trading down below 327.50. So if you're actively trading, that 327.50 would be a good pivot point to use today on your short-term time frames. If we, open the day at, let's say, I'm just picking out a number here, 325, and we start going up and take out that 327.50, then that would be your objective place to go long. Otherwise, right here in the middle, I think it's going to be a tough read unless you can trade that opening range really, really well. I think you probably got to either wait for a pullback to 322.5 or wait for the breakout at 327.50 to give you some real good lines to shoot against on either the short or the long side. Moving on to IWM, we had taken a look below this big range we have, bounded by 187.50. We recovered that with a hammer. Again, really, we're not even up to the 8 EMA yet, so I've got my eyes focused on the bottom of this range for a confirmed breakdown that would open up the door to 170. You can see that here on the 60-minute chart where we've got a couple of prior lows right here and right here at 190.150, and we've got an open gap above. I would say that if price can break above 191.50, you got a real good chance to at least come up and test the gap and potentially fill it this afternoon if things get all bullish. So there is a technical target above. The one thing that would do would clean up unfinished business. Price likes to go up and fill these type areas before, if it's going to roll over, come up, get that check mark, and then roll down. So I think 191.50 is your nice pivot point on IWM, given that there were previous lows back in that area. Facebook had the big move yesterday. I have marked the gap for you here between 175 and 192. I've also dropped in a downtrend line that seems to fit pretty well, and we're right at the bottom of that now. So I think it's going to be important for Facebook to hold those gains. If it rolls over and enters the gap here at 192, then you've got a really nice tradable. I mean, what's that? 192. What is that? $17 of potential downside if it just comes down and fills that gap. So whether you're an active trader on Facebook or not, I think you want to alarm 192, as a heads up. If that does in fact move into the gap, I think that would be a nice trade. Apple got an initial pop off of earnings last night. That was since faded, I think probably on the back of Amazon's poor report. But what I've done here, there's a real nice trend line, and this goes back even farther, that I think, and it comes in at a really interesting spot. It comes in on this ledge of support on volume over price, 157.50. We've got the 200 EMA coming in right at that point. So we've got 3 layers of support there. We've got an important trend line. We've got the 200 EMA. We've got lateral support, all coming in at 157.50. For me, that's going to be a very important level to watch, even if you don't particularly want to trade it. You get Apple below the 200 and below that trend line, that is not going to be so hot for the market overall. That would be a sign that the top general is losing the thread, if you will. And if Apple's going down, probably a lot of other things are going down as well. So I would definitely set yourself an alarm at 157.50, simply as a heads up on what the biggest, most important stock in the market is doing. And if you see a break below, that would be a big check mark for the bears. Tesla. Here was the big earnings move. They since faded that, of course. They came back down. Big liquidation bar. What was that on Tuesday? Whether it has something to do with Elon Musk and his Twitter escapades. I heard somewhere that he was, selling some stock. Had a big look below yesterday. Came all the way down to this 825 level. So that kind of marks your near-term target. And I think as long as it stays below 900, you can see here that this has formed a pretty narrow consolidation area. And you can see the 200 EMA coming in right at that level. So again, I think that you can use that 200 EMA as a go, no-go line as far as Tesla's concerned. And whether you trade it or not, that's a good benchmark level to say, you know what, if Tesla can hold the 200 or get above it, then that's relatively bullish. But if it can't, that keeps the door open to these lower levels. And usually when you see a candle like that, but then it can't get above that prior level here at 900, which would be above the 200 EMA, that almost gives you a target of the next level that price will find. Microsoft had one of the best reports in all of the FATMAAN complex. We got a run up to 290, 291 area that got rejected. Found some support in these EMAs. And of course, yesterday was up 2.26%. But again, is right here at this 291 level. I regard that as a massive, massive level on Microsoft. Why? Reject, 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 right? So that is a big, big line of resistance. And you can see that right above that, you have a big, big void in the chart. So, and we've also got a big technical gap that is yet to be filled. So, if Microsoft can take out yesterday's high, which was at 291, I think it's a long, with the objective being to fill this gap, come up to 298, and I think that is where hopes and dreams probably die. You've got a larger level of resistance there, a place where there was a lot of support before it finally gave way. I kind of have my doubts whether it can do it. I think this is a good place on the short side. If you see that, if we open down a little bit today and we come up to that 291 area and you see a big stall there, it would be an objective short against 291 with a stop somewhat above. So I think this is a really, really important level for Microsoft. What I want to do is look over at the daily chart to see how we're set up. And the reason why I have my doubts whether Microsoft can really get through that level, we've got a convergence coming in right here at 293 of both the 50 and the 200. That's going to be a big, big hurdle to cross. Now, 293 is $2 higher than 291. So the risk there in a long, say you get that breakout above 291, is that you've got those looming EMAs just $2 above. So I think those EMAs will stop Microsoft dead in its tracks. We'll have to see, but that's going to be tough resistance. And I also want to say, remember, the 50 EMA, the 50 EMA is a faster moving EMA than the 200, of course. It's a shorter duration. And, as we move into next week, we're going to have the full bearish stack on EMAs again, like we're starting to see, ripple through these charts, that the 200 will be on top, followed by the 50, followed by the 20, followed by the 8. So then we'll have that full bearish stack that we've seen. And, a bearish stack is just as bearish as a bullish stack is bullish. It tells you the trend is down and that it's going to take a lot of work to get that uptrend back in place. So we've got lower highs and, we've got equal lows now because we haven't broken down below this low. Also keep in mind that you've got this big gap here from about 280 down to 270. So if you don't short it up here, I would definitely have an alarm down here at 280 for a $10 gap fill potential on Microsoft. Amazon, of course, had the disappointing report yesterday. Who knows where it's going to open today? What I did is drop in this gap based on after hours last night, which has the bottom of the gap down at 26.60 and the after hours low at 25.21. So today sets up as one. You can either trade today, the opening range, whether it's, whether they're going to try and buy it up or test these lower levels, or you can just wait till Monday and then that'll set up another really nice bracket trade on Amazon where we can mark the high and the low of today's range and then take that higher or lower when price breaks out of that range. Moving on to Google, our bracket trade actually worked as planned yesterday. We had our bracket set up here, which was trading after the gap down, and it broke into the gap and filled the gap. So if you were on top of that, had your alarm set, you got your $50 move. So if you took that, congratulations. If you didn't, have that be a reminder to yourself that these bracket trades work. Whether they're easy or hard, difficult to tell. This one was easy. There wasn't a ton of consolidation. It just, popped above, went up to fill that gap immediately. So now that technical event has been crossed off the list. No unfilled gaps above to worry about. And so now the downside is open without that gap above. So, from a technical standpoint, that's a good thing. And also, you could view this as a breakdown and a back test, revisiting the scene of the crime. So now this can go down, now that it's gone down, backfilled, then it's free to go lower if it wants to do that. Let's look at the daily chart because I think it's important. The most important thing I see on this chart is we've already had a major technical breakdown from this 25 area. Now, the thing that could happen, I'm not saying it's likely or not likely, but it wouldn't be outside the realm of possibility that if the market gets bullish here, that we don't get this full back test, breakdown back test where it runs into this resistance line and then fails. I'm kind of the opinion that that's not going to happen, but you follow price. If price can break above yesterday's high, then you've got an objective long against that level. What was it? 23.93. Right here, you've got an open path to go back to that 25 level for a back test. So keep that in mind. Notice here again, got the full bearish stack. You can see that the 50 is breaking below the 200. So there again, we're not even back to the 8-day yet. Getting towards oversold on RSI, and you can see PPO well into the bearish regime. So those are kind of indicating lower could be bounces in between. Netflix had a bounce yesterday. If you're trading that, now I think you can use this 212.50 as a pivot point. You know, if you got long yesterday, that's the target you're looking for a breakdown and a back test in this range. Maybe it consolidates here for a while, but I would certainly have this 187.50 down here alarmed, because if price were to violate that, then you're going to bring in more selling. And if you're interested in it, if price does rally into 212, then you've got an excellent pivot there. If you're not in it, you've got an excellent pivot there, because if it breaks above, then you got a good shot at 227 and possibly all the way back up here to 250 to test the bottom of the gap. So if you're not in it, I would certainly have 212.50 alarmed, and I'd have 187.50 alarmed, because those are going to be your really objective levels for decision making going forward on Netflix. Moving on to semis. If you recall, in earlier episodes this week, we said 240 was a really, really important level. And so now we've broken down, and with the rally yesterday, it was a good rally, almost 6%, came all the way back to touch this 240 level. And so now we're at an excellent pivot point. You break above 240, that opens the door to the top of this prior range at 247.50. If it can't do it, you've got a very objective short with a stop just above, looking for a move back down to test the lows at 227.50. If we go over to the daily chart, you can see the whole scope of things. Lower highs, lower lows. We made it back to the midpoint of the channel, and you can see that this was support, a lot of support in here. And so now we're coming back into a major level of resistance where you've got a lot of overhead supply sitting right there at 240. So critical spot on the chart. I think you can see that 240, a break above, could run up here in the upper half of this down channel. But if it gets rejected there, I think we roll down towards this 223, which is if you go back in the chart, that is a bigger line of support there. And then 215 would be a T2 on any kind of rollover. I'd have the first target being 223 and the second target being 215. So what I'm going to do on the blog site this morning is I'm going to drop in some commodity charts. I've also in the email this morning, I'm going to give you links to a couple of presentations by Ole Hansen. He's the head of commodity research at Saxo Bank over in Europe. Pretty good guy, pretty knowledgeable. He's been through a lot of wars. He provides a comprehensive look at the commodity complex, kind of laying out what he sees going on. Oil is testing the upper range of a consolidation triangle that it's been grinding around for the last several weeks. Oil is up this morning threatening to break out of that triangle. So I think there's going to be a trade there to be had very soon, if not today. Also, I run through the ag commodities and copper. Gold is up 25 this morning. So anyhow, when you got some time this weekend, possibly listen to Ole Hansen on his commodity outlook. We've got the Fed next week on May 4th, and I still maintain that come hell or high water, the Fed wants this market to go lower. And I can't tell you if that starts on May 4th or it starts later than that, but they're taking liquidity out of the system through a combination of rate hikes and qualitative tightening on the balance sheet, and that is going to be felt. I mean, there's no doubt. And whenever prices pop up, I think that's going to harden their resolve, whether it means an intra-meeting hike or, you know what, 50 really didn't do the job in May, so we're going to go 75 in June. I'm just throwing things out there to make the point that they've all but told us they want the market to go down. They want to realize a reverse wealth effect to knock down demand, to knock down inflation. That's the only tools that they have, right? They can't knock down oil. They can't knock down corn. They can't knock down copper. All they can do is knock down demand by knocking down the market, knocking down home prices, knocking down assets that make people feel good, like they're flush, and knock down spending. So, and that's going to knock down that demand factor. So, the macro backdrop is bearish, but we've got to live in the real world versus the theoretical macro world, and we've got to trade price. But my bias is lower, and I think as far as your positioning and thought process should be, yes, I'll trade a short-term bear market rally because they can be sharp and they can be significant. Certainly, if you're an active trader, you don't want to just stay in your shorts and say, yeah, but the market's going lower. You can trade that bear market rally, but in the back of your mind, be thinking, I want to be ready to fade this when it runs out of gas, because I think they will. I don't think we're in the stages of getting ready to relaunch to new highs. So whether the bounces are feeble or strong, I think that your mindset should be one of rallies are temporary, and that this market has got to go lower before it can go higher based on what the Fed has told us. So let's wrap it up there, see how we close the week, see how Apple and Amazon trade today based on their reports. Keeping in mind we've got the FOMC next week on Wednesday, May 4th at 2 p.m. A lot of eyeballs and ears will be listening to Jay Powell to see what he has to say. If you're new to the channel, thank you so much for spending some time with me this morning. As you can tell, the channel is technically driven. I spend a lot of time trying to give subscribers very objective levels and commentary to trade around those levels, where you can offload that bandwidth of, oh my God, do I have the right level? What should I be thinking here? And you can focus your efforts on execution. If that's something that appeals to you, please hit the subscribe button and the alarm bell. Pass the link along to others in your trade group that may benefit from the work. And like I said, jump over in the show notes. Take the extra 15 seconds to find the link to the blog site where you can drop in your email address, join the team, and then you'll get my commentary morning, noon, or night over the weekend. Whenever I have something to say, I'll send it out, and you'll get that in a nice, neat package in your inbox. You won't have to hunt for it or wonder if you've missed anything. And longtime subscribers, thank you so much for the support. I really appreciate it. I hope the work is benefiting you greatly and it's helping you become a better trader. So let's wrap it up there. This has been Chris Buss with Trader's Profit Compass. Have a good day of trading. Have a good, relaxing weekend, and talk to you next time.